Guys, good morning. How are you doing? I hope everyone is doing great. Yeah, it was very sudden that on the weekend I got sick. I received a virus somehow. I don't know what happened, but yeah, I was honestly unwell and I couldn't even do, regardless I was home, I couldn't even do a webinar. So Um, that's why I said, good morning, Theo. Welcome back. Thank you, guys. Roland, how are you doing? Good morning, Roland. Larry said, good morning. Good morning, guys. Maria Julia said, finally, good morning. All. Okay. Janice said, good morning. Mogio said, good morning. Theo and everyone. Nick said, hi, everybody. Nicholas, how are you doing, Nicholas? Brahim said, good morning, Theo, and good morning, everyone. Hope you had a nice rest. Well, as usual, let's go through the risk disclaimer. States that this content is for general information only and is not intended to provide trading or investment advice or personal recommendations. Guys, this week I didn't record any podcasts about the fundamental news, so I'll try to go through some of them today during the live. And of course, for new traders, please make sure you download the mobile app on your device. Let's share this screen just to check the news. So here is the economic calendar as per our Admiral's website. On Monday, the trade balance in Germany that affected the euro, and expectation is to reduce to 18 billion, but it reduced even more to 15.9 billion, and that caused also the euro some turbulence there. On Tuesday, yesterday, the Reserve Bank of Australia kept the rates unchanged to 4.1%, and we saw the Australian dollar move by significantly by more than 1% during the Forex market. We saw it reached 1.68 and it ended up to 1.21, something like this. Excuse me. Today, Australian GDP growth rate expected to drop to 0.3% from 0.4%, and the actual came 0.4%. So, and yeah, later on, ISM Service Purchase Manufacturer Index still above the benchmark 50. On Thursday, trade balance in Australia is expected to drop, and that's gonna affect the Australian dollar. And let me tell you something: if you are a new trader, or if you are experienced trader but you are new to these webinars, most likely you haven't been told, but Australian dollar, New Zealand dollar, Canadian dollar, those are the three major commodity currencies. And because they are heavily as well, they are heavily on imports, exports in general, the balance of trade really affect the performance of these three currencies. Okay, so every time you see trade of balance, especially on the Aussie, New Zealand, and the loonie, the Canadian dollar, if you are trading intraday at these times, please be cautious that the market can create some unusual volatility before it takes its direction. I thought that today Bank of Canada will report the interest rates, the new rates, but I don't see it on the calendar here. I will double check. Anyway, keep an eye on that one, and if it's gonna be during the New York session. And on Friday, unemployment rate in Canada is expected to rise, and that's not going to be any good for the Canadian dollar. So back to main screen. Let's check the charts, of course. So, guys, please let me know if you have any currency pair you would like to do some analysis. Radov, good morning. Ruben, good morning, Theo. I hope you are well. Yeah, I'm much better. I'm trying my best. Ibrahim, yeah, Mohammed said, welcome back. Thank you so much, my friend. Thanks, Ibrahim. Zabarayat said, good morning, Theo. Maria Julia said, Bank of Canada event is marked with 2 yellow dots. Thanks for the point. Appreciate it. So, guys, yes, it's on the calendar, but it marks with 2 dots. Soreen said, good morning. So, pound against the US dollar. What can we see here? Price yesterday false break out this last swing. Market make new low as a new lower high, and it kind of false breakout with a new lower low. Price didn't close below this low, to be honest, and that raised some uncertainty whether the pound it has more strength to move to the downside, taking in consideration that this looks like a sloppy chubby downtrend. Okay, it doesn't have the sequence we want to see in a normal downtrend. Why? Because this point to that point, it created, oh my God, how am I drawing? This point to this point here, it created this impulse swing, but it created also this long correction. Usually what we want to see, and the same here, 4 bars impulse move and 4 bars correction. Okay, 3 bars correction. So pretty much the same length, the same duration. When one force is stronger than the other, usually the direction move is obvious and the correction is happening in less time, takes less time. So taking in consideration that we close with a bearish candle in a downtrend, we continue looking for shorts, but again, it had the opportunity to close below this low here. I'm a bit skeptical about the pound today for intraday trading. Euro US dollar, obvious weakness on the euro, and that's a kind of a sign we would like to see, and we can see it on the chart very well. So lower high, lower low, everything, lower close. There is still some room for another, let's say, 1 ATR, 70 pips for the price to move. So any intraday opportunities can be used to the short size, let's say on the 5-minute chart or 15-minute chart, if you are trading 15-minute charts. If we zoom out a little bit, price came from here, it's up to there, it trying to make this is a strong price action pattern, guys. Let me zoom in a little bit. This one here, now I'm on a 15-minute chart. We are expecting sellers to come in force and price sold off, then buyers came in, and then sellers again. Now, if they're going to close below these lows here, it's a very, very strong sales signal. Now, there is a level of support somewhere here. Fairly good room for opportunity, depends on your reward to risk. I see here some unmitigated candles, unmitigated, and it can be used for price to come and tap into this area of support. And because we are looking for shorts, and it looks like maybe an ideal one, Australian dollar, US dollar bounced at this support level yesterday. You see yesterday, due to the news events, the price moved at its predominant direction where it's supposed to move, but it moved fast. And that's the beauty of the volatility in the Forex market. The volatility in the Forex market, it's the best thing a trader needs to expect it. But on the higher time frames, when you do swing trading, because the volatility in this case, it didn't spike. Okay, sorry, maybe on the lower time frames we can see some fluctuations, but usually what happens in the lower time frames at the news event, price is gonna, let's say it's in a downtrend, okay, price it's gonna push maybe higher 20 pips. If there are traders with stop losses on the 5, 10, 15 pips, everybody will get flushed out, and then it's going to continue to the predominant direction. Why does that? Everyone has their own theory. The point is not why the market does this. The point is we acknowledge that the market does it, and how do we protect our trades, or how do we trade? And yesterday, with the Reserve Bank of Australia reporting the new unchanged rates, it looks like it's not good for the Australian dollar. They perceive it as negative for their economy. So the majority of the big funded, let's say, for a price to move that much, it needs not millions, but most likely billions of dollars to move this price like this. Okay, so whoever controls then dominate the markets, and in this way. Now, what's the good thing at this point is that we reached the level of support, and the indicator shows that there is a lack of momentum for the sellers. Lack of momentum for the sellers doesn't, and write this down, it doesn't mean that the divergence will change the direction. Actually, there is a misunderstanding about trading divergence. And what is the first reason to look at the divergence is traders, they look at it at the wrong place, mainly. When you are in a downtrend, guys, pay attention to this. You are in a downtrend and you spot divergence at this point here in a lower time frames when price is moving upwards and there is a correction, and you spot divergence in this upward momentum. If you spot bearish divergence, so the price moves higher high and the indicator moves low, creates lower low on the lower time frames, that's a good sign that this upward move, which we see just in one candle on the daily chart, lower time frames, it will be shown as a higher highs and higher low series. This one here, this trend, likely come to the end. It lacks the momentum to continue. But the matter of fact is we are in a downtrend, so we want to sell. Now, traders, they take the concept of divergence, and the second thing is when we are, for example, in a downtrend, this can go for an uptrend and downtrend. When we are in a downtrend, like now, and price comes at support and doesn't close below the support with divergences, it's a good signal that today we do not sell. That's exactly what divergence means here. But traders, they take this "we don't sell today" and they convert it to "if we don't sell today, then we buy today." Why? Because if the price is not going to fall below, most likely it's going to bounce upwards. Right? Maybe. But we don't have any confirmation for that. So divergences are very powerful to trade them with a trend and use them in a lower time frame to identify where the pullback most likely comes to an end, to continue with a predominant direction, regardless if your time frame for analysis is the 1 hour or the 4 hour or the 5-minute chart and you execute on the 1 second chart. Doesn't matter. It's just to understand how this indicator, it's one of the most powerful indicators, okay? But to spot divergence. But you understand how to use it. Like if I take you back for a sec, this one here, there is bearish divergence on the indicator and there is equal high on the price. But in technical analysis, as I explained you multiple times, when the two tops, they are apart for more than 3 weeks, it considered as a very strong double top. Now, double top with divergence, bearish divergence, is the best, in my opinion, the most powerful setup for a trader. But how do we trade? We have to wait for the next candle to show that there is a lack of buying pressure, and then we execute. It's a very interesting subject, the divergences in Forex market. Trust me, it's one of my favorite way of trading. But again, we have to understand and know how to use it. In this webinar, I try to explain as much as possible in that limited time. Next one, New Zealand US dollar. Price makes lower lows. The indicator makes higher lows. So, and you see every impulse move towards the downside, it's lacking the momentum comparing to the previous impulse move. So if every time the market in its trial to run to the downside, it losing momentum, at some point an explosion to the upside will appear on the price. But if a trader is trying to pick up this one, or is trying to pick up this one, and then is trying to pick up this one, so far experience losing trades. Now, if that's how you want to trade, then you have to find a way to filter every signal to add, let's say, one more confluence. Like, for example, you want the price to be at support, at a higher time frame support. And if you find your divergence, yes, you feel more confident because it's at support to buy. but without the support, it looks like there is low probability for divergences to play out. And Florian asks, pound JPY 1 hour has 3 touches on a top trend line. Can we trade? How can we trade it to the best? I will check that in a while. USD JPY daily chart. So price broke and closed higher than this high here. We explained this consolidation. Some traders, we said that they might start selling with the bearish engulfing. I told you the bearish engulfing is best to utilize in a downtrend, not in an uptrend. And like there were multiple bearish engulfings, like this one here, like this one here, but because they appear in an uptrend, it takes the strength of the signal out of it. And then we had this bullish engulfing, and we talked about this almost bullish engulfing, equal lows, but it false break at this point here. So a tighter stop loss, it has been flushed out. We said that we do expect a push to the upside because that's most likely shown to be a continuation, consolidation, rather than a reversal pattern. And in that case, a bullish engulfing here signaled the beginning of this move. Now, that was on Friday. So on Monday, we would have seen that. On Monday, I didn't even check the chart. But for me, guys, I wouldn't have taken that trade. Why? Because it's within this consolidation, and I didn't want to buy here, stop loss there with the expectation of the breakout. Yes, likely the breakout will have been occur, but because it's not the way I trade the markets, that's why I don't see this a good signal to take a trade on. Okay, if you guys took that trade, you have 180 pip stop loss with an ATR of 100. So this has to, the stop loss has to make sense compared to the ATR. I hope you guys understand this. We explained it in previous webinars, but if you are new here, let me know, and I try to explain this stuff again with the ATR. We have 6 minutes, 5 minutes actually for the London Open. USD Canadian dollar at this resistance price is fighting so much here. Let's see if it's gonna push to the downside. USD CHF, higher highs, higher lows. Expectation was to see the price to come all the way down, but no. Now what can we expect? It really, this area of for those who trade order block, by the way, because I ask you to leave multiple times feedback after I end the webinar, and also send me email for those who for you guys viewing from YouTube. Instead of typing on the chat box, you can send me an email as well about feedbacks. And I saw many people, they are trying to understand how to trade order blocks and all this stuff. So I really didn't know that. So for those who are trading order blocks, let's say on the daily chart, I'm not going to explain in these webinars what is an order block, because it's not the purpose of the webinar, but I can find a way and teach you a few things. So this is a valid one. And there is too much of unmitigated or free price fall. Therefore, the price has to come and take all these areas here. So in this region here, we can scroll on the 4-hour chart, 1-hour chart to try and find something to get involved to the downside. So, yeah. That's all for this. But in the meantime, it looks like a bullish momentum is yet to come on the USD CHF. Quickly, thanks, Ruben. quickly 1 hour chart. Yeah, 3 touches on the trend line. 1, 2, 3, 4, 5. Yep, that looks a good one for a short-term sale. On the daily chart, what do we have here? The daily chart doesn't have any clarity, honestly. We don't see anything here, but on the 1 hour chart, yeah, these lower highs, lower lows. So when the price retrace or correct up back here, if we see a strong price action rejected at this trend line, we can use it for some short positions. Let's move fast to the DAX, and then we're going to go to check the CHF JPY as per it's just right. Yeah. DAX on the 5-minute. So on the 5-minute DAX daily chart, we have this, I have a trade on for short, some scalping I entered in the morning. So I'm still looking for shorts here. 4 hour chart, very close with bearish engulfing. So I was looking for shorts just a little bit above this line. 5-minute chart. I will place a sell stop order below here. Do you guys know how to calculate your lot size on the indices, on the MetaTrader? And if price, here is my stop loss for the first trade. If price is going to come above here, I'll be looking to buy for this morning scalping. Suggested no. So both trades have been placed on the DAX. We are waiting the market to take one or the other. CHF JPY, what impact would be the Bank of Japan speech? Hayao said, good morning. Look, on the CHF JPY, let's wait for the London Open. 1 minute to check how the trade will perform, and then we will come back to that. But in general, Bank of Japan speech will affect the Japanese yen, right? So whatever comes, any other currency follows that, it's going to be affected. So if the Japanese yen, it's going to show some weakness. I got triggered on the short trade, so I will cancel the first one, the buy stop. No, delete buy stop. Yep. So let's see if the market is going to move in our direction, the way we expected it to move. So guys, trade played out really good. We are on the 10 points. I'm closing the trade on the, I'm closing now on the 20 points eventually. Yep, done. For those who took the trade, we had a good trade. You see, the best and easiest trades, honestly, the easiest trades to come to you guys are the trades, the higher time frame. It's in a higher time frame, let's say it's in a defined downtrend, and also price action agrees. That's a 2-in-1. Higher time frame is down, price action bearish engulfing. We go on the 5-minute chart. We find this nice, very nice pullback. We sell here. We can easily take 20 points from the DAX. Easy. I had 2 trades on, to be honest. The one was based on Bollinger Bands, and the other was based on the strategy we do now. It was a bearish engulfing on the Bollinger Band early at 9:05. So I took that one too. Florin said DAX is in an upward channel from 18th of August. An upward channel. Okay. You mean this one here? That's the channel. But here it broke. False break. Okay. Yeah. We can see that. Yeah. Good spot on Florin. Also. Okay, guys, I think that's all from me today. Thank you for your participation in these webinars again. I hope you're going to have a great rest of the day. Enjoy your trading. And yeah, I look forward to see you tomorrow at the same time. Thank you so much. If you have any feedback, please leave them on the after I end the webinar, or you can send me an email. That's fine. Either way. Thank you. See you tomorrow.